What we saw is that most markets in the United States, I think the market is pretty different than it was before the pandemic. The most important thing is that inventory levels are just generally a lot lower. But when we say that there is a buyer's market, what we mean is that there is at least 10% more buyers than there are sellers. Or sorry, there's at least 10% more sellers than there are buyers. And the reason why that matters is it means that buyers still have the upper hand. So they, have some choice. They, have some homes to choose from. It also means that they can negotiate at closing. They can negotiate on the price. They can negotiate on concessions. So buyers have just a bit more power than sellers do. In a market like Austin, however, where there's 130% more sellers than there are buyers, buyers really do have considerable amount of power. And in a market like that, we do expect to see that prices are actually flat or that they're dropping. And that means that buyers are seeing more affordability than they were a year ago. We do think that given the big discrepancy between the number of sellers and number of buyers in the Austin market, that home prices are going to continue to be pretty soft. That means we do think that prices will actually get more favorable for buyers. If rates stay pretty low, that means, a better affordability picture for buyers. Um, this might, I don't think the situation would necessarily get worse for sellers, because a lot of the reason why Austin is in this position is because there was a lot of new construction that was done in Austin, and that really added to the amount of supply. We know that if you're looking into the pipeline now, there's less new construction that will be rolling out in the future, and we know that starts and permits are also down. So that means that the bulk of the new construction has really already hit. So that means that, looking forward, buyers may not necessarily have as much power as they do right now.